Okay, welcome all to today's FX Street webinar at 9 a.m. Eastern Time and 13 GMT. My name is Fan Yang. I'm a Chief Market Technician. I'm Chartered Market Technician, and I own FXTimes.com. I'm going to give a little plug there for my site. You can check my updates there on a daily basis. And it's good of FX Street to have us together today, as I'm going to look over some of the technical setups for the second quarter. We're coming to an end of the first quarter, end of March, so sort of want to take a step back and look at the big picture. But we're going to start with the small picture. We're going to look at the intraday action and the action we have had these couple of weeks. And then we're going to expand out to the larger degree technical setups, okay? We're going to start with the euro dollar, and everybody here should already know the current pressure on the euro coming from the Cyprus drama. I'm not going to go over all the headlines, but you can see in the chart itself that we've had a lot of pressure. Let me actually zoom out to the 4-hour chart to look at the decline we had since our February 1st high here at 1.3710. It's been a choppy one, but you can see all these strong bearish candles compared to the smaller bullish candles, which represented pullbacks, minor corrections. And actually here I filled in this gap here. This was when we had that Cyprus bailout news. Okay. The fact that they needed bailout, and the market just sort of dumped the euro. Okay, we had still a very choppy market, and then we come up to this week. Okay, here we started the week just like last week with a very strong opening dip, and then, just to review this week's action so far, after that dip, we started to consolidate. And those that have followed some of my my analysis, or is in my chat room and Skype room where we discuss our trade ideas, you know that I like breakout trades. Okay, so this is one that I caught, but I have to note that yesterday I put an order too close. I had basically, this is the decision process, the thinking process here when I look at the 1-hour chart, and everyone makes mistakes, so I'm going to actually start off with a mistake here where I actually looked at this. I felt like we needed to clear 1.29. I like that. Sometimes I like that psychological whole number. I feel like it needs to go above that, but I was quick to pull the trigger right above 1.2885 and excuse me, and immediately got sort of stung here for a quick short loss. But while I recouped from that, I did put an order under this sort of, you see the market sort of elbowed its way out of the previous consolidation zone to set up a wider one. It does that sometimes. That's why you need to be careful with breakouts, especially when it's breakout from low volatility. It might not be a real breakout yet. If it's a breakout that's after some elbowing, some shakeouts, and then you see a breakout from that range, in my opinion, that's a little more significant than, say, you had a small range indecision, and then you sort of elbow out. Now, I'm not saying that a breakout from a small range can't result in a trend. I'm just saying sometimes you do see these shakeouts before the actual breakout gets into a swing. So we have a break here, okay, and for me, this is a nice little break. By this time, by 1.2750, I would like to see, before moving in my stop, I would like to see some kind of pivot, and then I would move my my stop to that pivot, or above that pivot, as a trailing stop. So we don't have that right now. This is still the first swing coming out of the breakout. So, but by this time, even if you don't trail it, I think putting it to break even would be a good idea. Okay. It depends. You might want to give it some breathing room, seeing that the market has been very choppy anyway. So you might want to, just give it some breathing room. Yes. The position is open. I do have a position open, and I didn't move up my stop just yet, so I'm just waiting for further development here. But if there's a pullback, I would anticipate some resistance here for the previous support. However, a break above 1.2850, now that's gonna spell trouble, and that's gonna be a possible consolidation ahead. Maybe for the rest of the week we'll get some more sideways action, just like we did last week in this sort of fake out inverse head and shoulder. Okay, we had a break to the upside, but that break was faded fairly quickly relative to this development here. It was faded quickly. Okay, so be careful. We might get this type of action. We break and then we continue to consolidate, more of an expanding type of consolidation. So just, I would move my stop to break even if I start to see a strong move up. But for now, what I think the development for the next quarter is. So now I'm going to jump out of the 1 hour. Maybe jump out of the 4 hour as well, go to the daily chart. Okay, and you see in the daily chart this March, or I should say February through March decline is a correction. You could say it's a correction of the July to February rally from 1.24 at 1.2041 to 1.3710. And we have passed the 200-day moving average and the 50% retracement level. This is sort of the mean, the middle of this rally. And now we're moving lower, and I see a support zone here, a level where we might find demand between 1.2660 and 1.2680. Okay, so this is a previous support pivot and 61.8% retracement. And so this 200 moving average is the simple moving average, and I also have 100, 50, 21, and 8. Okay, all simple moving averages. But I'm not big on the parameters, and then having specific parameters for these. They're really just for me to visualize when the market is in congestion. It does help me visualize also the fact that you see there's a flat 200 moving average, so there isn't a trend. When you look at the daily chart, there isn't really a strong trend with momentum yet. Okay, the trend we had from July to February was two swings, right? Or say three swings if you count this downswing, but two upswings. Not really a well-developed trend yet. And if you look back, you see the trend, if there is one, is actually, from here, we had several swings since early 2011 downwards. Okay? And if you look all the way back to the financial crisis, we've been having a very choppy market. The euro dollar, after its inception and rally since its inception, has been consolidating these few years, okay, in a long-term perspective. So going back now, that long-term perspective might not be a big, it might not have a lot of significance in the short term. In the short term, the 61.8% could give us some support. Now, if this breaks, then we probably this retracement is probably not just a retracement, right? if this breaks, we could be in a pretty major bear trend, in my opinion. Okay, it would signify that we have a failure of holding higher lows. We have a higher high, and then here we had a higher low from November relative to July. But if we can't hold another higher low, then you're thinking, oh, it's pretty late in the game to finally call this a bearish trend. But that's how it is. We have to make sure that this low gets taken out before really gaining more confidence in this trend. We could have a trend in the short term. We've been looking at this trend in the short term for a while now, but to extend it to the medium term or even longer term, we need to break below this 1.2660, in my opinion, and you need to give it some elbow space. If we just break to 1.2650, and then we get a very sharp rebound, that might not be a true break. So we need a nice clear break. We might need the week to end before judging the breakout. If, like, say, the break comes in on Tuesday, you might have to wait till Friday to see to make sure that there's no fake out. So that's the key level to watch for in this coming month and I guess quarter. If we have a bounce and we break above this falling trend line, we could be looking for some kind of rebound up to these levels. I wouldn't, because of the fact we had a sharp decline here since February, I wouldn't be looking for a bullish continuation. I'll be conservative on my bullish outlook, and 1.31 area might be sort of the generic target for a break above the falling trend line here. Okay. Okay, so nice trend since February. Yes, there's been a nice little swing down since February. And Paul, good to have you here. Can you go back to the long term? And if it keeps going, how low can it go? Okay, so if it keeps going, my first targets would be this over here. Okay. In the short term, we look for 78.6% retracement, 1.24. Okay, and then if if the trend maintains, or we might get a consolidation and then a break to signal further bearish continuation, then look for these lows here, 1.2041, 1.20, all the way down to these 2010 lows. Okay, that might be a discussion for later in the second quarter. I don't see it. It's possible if there's a panic, if there's some kind of panic coming out of the Eurozone, this could happen. There's Eurozone panics could just kind of make the euro dump, and it could just take a few weeks before we reach down here. But looking at price action, how long it usually takes for the market to get down here from the levels we are now, I would say if it does, towards the end of the second quarter, we might, or even in the summer, we might see this type of scenario. But for now, like I said, keep our close eye on 61.8%, and below that 1.24, 78.6%. And in the near term to very short term, yes, the target 1.2660 to 80. That would be the target for the current swing, or maybe current two swings down. Okay. All right, let me move on. We could come back to this later if you guys have more questions. I want to make sure I look at all the majors. Pound dollar. I was discussing this in my Skype chat room yesterday, and this was a nice little development. Well, first of all, We have had a bearish trend this entire year, since the beginning of the year, where we popped up a couple of for the first session, 1.6380. Check your charts, because some MT4 charts have 6340. I have 6380 as high on the year, so that might influence the way you draw your trend line. But for me, this is a pretty nice trend line, and it was in confluence with the 4-hour 200 moving average, and we had some nice little reversal price action combination here, or candlestick combination here, that sort of gave us the initial idea that, hey, this rally might have some trouble here. It's losing steam. Now, I'm not the type of person to actually sell right up here. I'm not the counter trend type, but I know that could be a strategy, but not the one I use. For me, I was playing this break more than trying to catch this reversal up here. For me, the break helps me quote-unquote confirm. Confirm seems like you're 100% sure. You're never 100% sure, but still, confirmation as far as having more, like slightly more assurance, slightly more confidence in the, this downtrend continuing. So we have a break, and you have to sort of weather some shakes to the upside, some shakeout attempt. At the break, what I did was put my stop above this high, so it's pretty wide stop, but the target for my first target is down to this level. I have to watch this pivot too. Can't be completely oblivious to this little pivot, because it was a strong move there. Gotta watch 1.5025, but really 1.50 down to these levels, 1.4980 area. That would be my first target. I'll probably move in my trailing stop, because I would expect some consolidation, which means if there is some consolidation, I would still have a chance to get back in if there's a break to the downside, and I would look for 1.4830 as the next target, maybe 4830 up to 4850 area down here for the 2013 lows for this swing. So I'm looking at a bearish continuation, but in the short term, I do have to worry a little bit, because this swing here in March was a little bit stronger than the swings we have had throughout this decline, right? So it feels like it's a little more significant type of consolidation. So we could have an A, B, C kind of consolidation, right? So be aware of that. Why am I fearing that more? Because the RSI, it didn't hold under 40, under 60. If it did, I would be more confident of the bearish trend maintenance. But now it looks like that bearish momentum maintenance. RSI is for me is a reflection of momentum, and the fact that it tagged 70 was not a good sign for me. Although if you do look back here, we had this as well. We tagged 70, and as long as the market was holding under the 200 moving average, we were fine. Here we did hold under the 200 moving average, so maybe this is just sort of throwing me off a little bit, sort of giving me that analysis paralysis syndrome, but it does, kind of scale me back on how much confidence I have in the downtrend. Regardless, I do have a position here, and I'm looking to, for the first target here, 1.5026. By that point, I'll probably put in a pretty close trailing stop. Okay, so we'll see how this develops. It could take several days. These breakouts from the, this is a trend line we have for pretty much the entire month. So for price action to develop after the breakout, you would have to expect, maybe a week at least of price development. So I'm waiting for that to play out. Okay, so if things improve, the euro dollar. Actually, let me make sure I don't miss any up here. Price hit 38.2% of the last bull swing. Oh, okay. So maybe you're talking about this. Yes. Okay. Good eye. We are in the near term right now, at 1.51, which is near this 38.2% retracement level. And we do see some intraday demand here. Going down to the 1 hour chart, you also see the RSI tag 30 for a little bit of intraday counter trend action. Again, this is not the strategy I employ, but I think I could still point it out that we have Fibonacci retracement level 1.51 whole number and RSI tagging 30. Some people might call this a scalp, trying to scalp this little correction. For me, I'm actually waiting for the pullback to give me a pivot, and if it does give me a pivot and continue lower, I could put a stop above that pivot, probably break even by that point, or at least lock in some 20 pips or something like that. What I would prefer would be the market sort of go sideways and then break down. In that case, I could actually add another position. Okay, it's really tough for me to add if it's just sort of a up-down kind of move. But if it's consolidating and then it breaks down, I could add position. And but when you add position, you want to also move in your trailing stop, because you're adding risk, but if you move in your stop, you're reducing that risk. Okay, so pound dollar getting a little bit of support here early U.S. session. And that translates to euro dollar falling further. I think I did mention this. I've been looking at this level a lot, 0.8570. After this market came up here, maybe in last month's webinar I did talk about it. I'm not sure, but that was an important level to break, and the market was choppy, but still, it was bearish after that, and my target was 0.8445. Unfortunately, this choppy action shook me out early, so I didn't get on this choppy downtrend all the way down to 0.8445. Okay, so that's your next support pivot. Let me go to the daily chart. Euro pound. If you look at going back to the weekly chart, you look at it in the weekly chart. It's consolidating since 2009, and it's slightly downwards. And for Q3, I feel like if it breaks this 0.8445 and sort of establishes a top here, we could get into a bearish mode. But before jumping the gun on the longer term bearish outlook, short term bearish outlook, would at least go to somewhere between 50 and 61.8% retracement of our 2012 into early 2013 swing here. Okay, at least somewhere here. A little more aggressive projection. You take the top here and project it a little further. These are a couple of targets you might look for in the bearish case. Okay, and also in this daily chart, the RSI breaking 40 would be a good sign that this bullish momentum is gone. Okay, but even with price action, you could see topping action forming. Okay. All right, so we don't want to leave the cable, so let's go back to that. support on 1.5073. Oh, okay. So you're talking about these levels here. Yes, there's a near-term support there. That type of support is sort of like what I would expect at 38.2% retracement, sort of the intraday support. Okay, so you find all these near-term pivots, right? And you could use them for your trade management, depending on whether you want to give it some elbow space. At this point, I do want to give it some elbow space to develop further before putting my stop too close. But the trade-off there is, hey, you don't lock in those initial 15-20 pips, and you might actually hit your stop if the market reverses, right? So this is sort of your correction against this rally, and if the market breaks above, that's one scenario that can happen. But for me, if I want to wait for one more, give it a chance to breathe, and in the next swing down, if that does form, then I would be putting in my trade management, shorter trade management. But yes, you're right. You can expect some near-term support there. 1.5073. 1.49. Let me see what. I'm not sure highs of 1.49. Ron, I'm not sure what you were referring to. If I was talking about these levels here, 1.50, around 1.50 would be 61.8%, but there's like a support and resistance pivot zone here, 1.50 down to maybe 1.4980. Okay, maybe that's the area you were looking at. Okay. Alright, so moving on, Euro Pound, we're looking at some further bearish action in at least the early part of Q2, and then I want to see what happens here if this would break the rising trend line, and if it breaks, hey, we could be in a longer term bearish outlook. We could be looking at, look at the 61.8, 78.6%, and even down here in the 2012 lows, 77.56. Okay. Okay, so Boyke, if things improve, the euro dollar could go up instead of down. Yes, things improve. Anything is possible. Remember that a technical snapshot is a snapshot. It's not, when people try to use technical analysis as a predictive tool, and instead of sort of a guide for you to make decisions, understanding that there is still uncertainty, then they sort of, I think, get disappointed, because technical analysis and even fundamental analysis might not be predictive, and really to trade, it's not about predicting all the time. You do have predictions, you do make some prediction and anticipation, but I can't predict that things can't get better, and if it does get better, like I said, a break back up above this falling trend line would, for me at least, trigger some short-term outlook towards 1.31. Okay, maybe up to 1.3160. I think that there was like a pivot here. Yeah, 1.3160. Before this is when the market started to get choppy, the swing, the resistance there. So that could be my target up there if things do improve. Okay. All right. So Okay, what is my favorite pair to trade right now for your dollar strength? Well, I would say, in the past session it was the euro dollar and the pound dollar. I'm in both of those. And the Aussie dollar, I actually tried to go long on the Aussie dollar, and I got stopped out pretty quickly. And now the Aussie dollar, dollar strength is even pulling down Aussie dollar, which has been strong since the beginning of March. Okay, but we know that the swing, when we look at the daily chart, we know that this swing is in a range that we set up since 2012, the summer of 2012. We talked about this pretty much every time because it's been the same, in this daily chart. All these moving averages sideways, whipping up back and forth, and the concept here is the further away from this middle area you get, the more likely it will pull back. For me, with the trend developing like that, I was still looking for some more room toward 1.0585, 1.0623 area, but the market was failed to actually hold above 1.05, and now threatens to reverse this price action. Okay, so this trend line has been broken. Okay, what I want to see next, as far as my trading method goes, is to see some consolidation. And if we break below the consolidation, I'll go for it and look for this next pivot, or even pivot area as a target down here. So 1.0335, 1.0350 area. What would that be in Fibonacci retracement terms? That would be just around 38.2% retracement. So that could be the first target for this bearish outlook in the Aussie dollar. And as far as the larger picture goes, we looked at it like this. When the market is in this middle area, honestly, I don't know what to do. Maybe in the very short term we could short it into this area, but after that, I would be sidelined if the market is trading in the middle of this range, unless you go into your 15-minute charts and try to trade there. But I'm not. That's not the type of trader I am. I look for things that could develop a little bit longer time frame than that. Sometimes I do go to the 15-minute chart, but only if it's within a trend, a strong trend. There is no strong trend here. Like I said, the concept for me is the further away you get from this middle, the more tendency it has to come back down. So if it does get up to 1.06, for example, you could look for a short. Down here, it was a little more violent than we had in these past, some of these other tests of our range, support, and resistance. But look, it was very similar to this one, wasn't it? Alright, we had a push above the previous high here, but then an immediate retreat. Here we had a push below the previous low here, and then an immediate retreat to the upside. So this was a nice little one to catch. The breakout here was good too. We had, after this, if you weren't convinced, and that's, for me, I don't catch it right on these pins. Some people do. Some people try to trade off these, and that works out sometimes. But for me, I'm more comfortable with breakouts. So breakouts, and here we had another breakout, but here we have, a very strong pullback, stronger than the ones we had before, I would argue, and also it is breaking the rising trend line in our 4-hour chart. So this price action got me out of the most recent breakout attempt, and now I'm looking for possible short-term pullback towards 1.0350. Okay, so actually before that, can we take a look at Euro Yen? Yes, I'll take a look at that next. The COM dollars are looking better than others against USD, so I'll trade those if I look for US dollar weakness in the future, but now I'm not. You're right, the COM dollars for example, the Canadian dollar has been strong, but look, it's going to be testing a trend line soon, so I'm not sure. I'm not in this, but I'm saying, like, if you're holding a bearish position here, I would think about scaling out here near this trend line, or at least putting a closer trailing stop, so that if the market does come up, you would lock in some of the profits you had. Like this candle here could have shaken out some people. So we'll see. We'll see what happens with this trend line. I think that's an important trend line to start next quarter. If it breaks below it, the Canadian dollar, the dollar CAD could come back towards 1.0050, maybe even towards parity level. Okay. To me, when I looked at the weekly chart, sorry for this. Okay, there we go. Looking at the weekly chart, we had a recent break, so I was bullish on the dollar Canadian until recent price action kind of made me look at a possible break to the downside as well. But look, if it holds and breaks above this trend line I have, this is what I call a okay, so we do have a rounded top, and then we kind of, if you flip this upside down, this is sort of a, what do you call those, skips my head right now, the bottom where you have a little handle, cup and handle, there you go. Thank you guys. See, you guys are experts too, in these technical analysis terms, and pretty much that's what we have. We have the handle, but sometimes after the handle, this is pretty much an ABC correction, so that's another possibility. And if that does develop and it confirms we're breaking above this falling trend line, I'm looking at a bullish market in the third quarter towards 1.0445 up here, at least. Could come up all the way up here. Okay, so trend line's important here. We're kind of getting in the crossroad of a couple of trend lines. Okay, so that was a quick tangent, but okay, Euro Yen. Now take a look at that. What is the trigger candle for here? Can you tell me what here was? Which pair was that? I'll come back to that, but first let me go to Euro Yen. Okay, so going to the 1 hour chart, sort of just like the Euro dollar, I got a shakeout. Well, first of all, we had a break below this, right? Below this consolidation. But the break below that was immediately challenged by a rising trend line here. Okay, I talked about this on FX Times earlier this week. The triangle versus this ABC correction scenario. For me, the triangle scenario is not one that I could actually trade within the triangle. Again, I'm not the one to try to pick the reversal point. Okay, like here, this move from here to here, no, I would not be in that. Maybe some of you would, but me, I'm waiting for the breakout. The breakout is good for me. But look, there's been some earlier breakouts that, for me, I don't have to wait all the way until we do break out of the triangle to look for this swing towards 117 pretty much. Okay, swing projecting to 117. I'm looking at a breakout here, and then the market's consolidated, another breakout, and now you have to be agile though, because you never know. A break to the downside could come back up and do another one of these, sort of week-long consolidation. But so far, it's good. We have a maybe 2-day, 1.5 session consolidation here. I actually had an order to buy here, but because this trend was down in this time frame, in this 1 hour time frame, because we had a recent break to the downside from this, I'm not going to be aggressive on buying. Okay, but I did have a small position here, and that stopped out. But again, when you play these breakouts from consolidation, the good thing sometimes is that a false breakout means is a warning of a break to the other side. Okay, and this is exactly what happened. And the thing is, you have to be on point. You can't take too long to recoup from this little from this little loss here. Immediately jump to the other side and make sure, hey, if the market can't break this side, and if it wants to break the other side, maybe I could jump on that. And that's what we have here, a break to the downside, either from this trend line with the break of this trend line, you see it break back below all these moving averages, so it helps you visualize the breakout, gives you more confidence to pull the trigger. And we'll be down here testing these lows. So now we have, again, that possible shakeout. Okay, and it's up to you if you want to wait. I repeat myself here. What I like to see is some consolidation and then a break to the downside. Also, if you do have consolidation here, a break to the upside, you might be able to exit with break even or lock in 15, 20, 25 pips there. Depends on how big this consolidation is and how quick you exit on the break. So I would welcome consolidation, but if it comes straight up, that's going to be the weakness. See, I think in every trading strategy you have to understand there is going to be some type of market that you're not going to be able to win against, and some price action that you're going to have weakness against. For me, it would be these quick, sharp pullbacks. Okay, because that would. First of all, this is just one swing, so a pullback right after that for me takes away all my gains, because I need to wait for another swing before I put in a trailing stop. Okay, so that would be so that's what I'm thinking right now. Waiting for another swing to develop before I lock in profit and have a general target idea of 117. I mean, even if it doesn't get there and we see a strong pullback, I'm going to get out. Okay, because when you look at the daily chart, this is a bullish market. Okay, we're playing in the short term here, very short term here. Okay, so let's see, which time frame do you trade on? I like to look at 1 hour consolidation. Consolidation takes a few days, maybe 4 hour time frame. So those breakouts from those time frames, I sometimes drop to the 15-minute time frame if there's like a trend developing and I'm looking at a very intraday consolidation and I'm expecting the trend to continue. I want to jump in the trend. I might get into that 15-minute time frame, look for a consolidation there, and play the breakout into the direction of the trend. Okay, so like for example, in this swing, I go to the 15-minute chart. And if I see some consolidation, right, set up a nice, either this way or whatever type of support. A break of that support, gives me more confidence, and I would add to that position. Okay, so that's sometimes I go into the 15-minute chart when there is a trend that I'm catching, not just a breakout from like this one, right? This is you could go to the 15-minute chart to look at this breakout too, to the upside and to the downside. So I hope that kind of answers your question. 1 hour, 4 hours, sometimes 15 minutes. If it closes inside the triangle, would you consider buying instead of selling? For me, I know some might because they're playing that trend line, but not me. I would consider exiting, and if there is a consolidation and it breaks to the upside, yeah, I would consider a very small position. Half, 1/3 size of a position, and I would target the middle of this triangle, which for me is around 123. Okay. Would you sell under 120? Actually, 120 is what I want to see it break. So yeah, if there's that little consolidation, like I was talking about, anticipating, and the market falls below 120, I would add another half position. Okay, so that's euro yen. I think let's see, what else did I want to look at? Dollar yen. I think it's pretty important to look at dollar yen. There's a lot of development there. We had this price in of further easing, and now that we have the new chief, Bank of Japan chief Karudo, whose rhetoric is very strong in fighting deflation and using quantitative easing, so that conceptually should weaken the yen, but maybe the market has already priced in a lot of that, and just talk isn't going to be enough. We're going to have to see some action before the market can regain that yen weakness concept, right? The quantitative easing / yen weakness trade. For now, it's consolidating, and we see a little bit of a falling channel versus a rising trend line. So that's the theme for the start of the third quarter. Okay, falling channel, rising trend line. This rising trend line goes all the way back to November. Okay, a break below that opens up, I believe, 85 to 91 area. That would be your short-term target for the break of this trend line, and we'll see from there. If it breaks lower, we could start to look at this as a short-term trend to the downside. Okay, but be aware that this trend, quote-unquote trend, could still be a correction to the rally we had since 2012. Okay, we look at the weekly chart. I believe it put in a couple of bottoms here, and this was a very easy ride. I was on this ride through December and into January before it got a little bit choppier and harder to stay on. But this was a nice ride that I think the market has established a bottom. It's sort of changed the structure, right? When you look at the weekly chart, it has changed the structure already. You see the RSI pop way above 70, so it's established some strong bullish momentum. And I wouldn't, when I look at the downtrend, it would be all in the short term instead of looking at it to retest these all-time lows. So 91, 90, those would be sort of my maximum bearish target if there is a break below this rising trend line. Okay. All right. Do I scale out? Yeah, I scale out sometimes, Boyke, when I hit targets or hit some kind of strong support. It's a combination. If I did scale in, I'll scale out. If I didn't scale in yet, I wouldn't scale out. So that's that answer to that. Euro Aussie is a bit oversold. Would you still sell it? Euro, I did sell it earlier this week. It was one of those. Sometimes you put a oh, there we go. This is what happened earlier this week. Or was this? Okay, here we go. It was just again, you see this downswing. I'm looking at this as a consolidation, right? And there's a break, and that's all it was. And the thing is, it's like you said, it looks like it's oversold. So I wasn't gonna be, I wasn't gonna be trying to ride it for a long time. I tried to ride it, but that instead of waiting for a couple of swings, like here we had a pullback and then come back. That's already scary for me. So in the next comeback, the next swing coming back, I already exited. So it was a very small catch, I would say, for this bearish continuation. And if it starts to get choppy like this, it's going to be hard to trade the bearish continuation. But as far as trying to trade the reversal, that's not my style. I'm not. You could look at possible bullish divergence forming, the 61.8% at 1.22. Maybe that's an important level to look at. Okay. Oh, okay. Here we go. 1.61, 1.22, down to these levels, 1.2150. For me, if I want to trade a rally from here, I would have to see a nice consolidation and a pop above consolidation. If it's just like price action like this, it's going to be tough for me. Okay? Even though that's a nice candlestick, nice engulfing candlestick. So if you get that type of candlestick here, okay, that could be a warning. You see here another engulfing candlestick. That could be a nice little warning for the market to come back towards at least the 200-day moving average, which is flat. And if it's flat, it means there's no momentum. And if there's no momentum, the concept is the further away from the middle, the more likely it's going to pull back towards the middle. So the middle is always, middle or central price action, mean price action. That's sort of a generic target for this type of counter trend strategy. So hey, maybe like I said, as we get into these support areas, trying to short it into the bearish continuation would be a tough task, and I think you would have to be more agile, like take your trailing stop closer and lock in profit sooner, because of the anticipation of a reversal. Okay, so for the downtrend, I would still, because there is still a downtrend, my bias still favors trading a break to the downside, but just be more agile in terms of risk management, in my opinion, in terms of trade management and exiting. Okay, all right. I think we're closing in to the end, so those are the majors and some of the pairs you guys wanted to look at. If you don't have any more questions, that's it for today. I'll be back next month, and once again, you can check out my updates on www.fxtimes.com, and you can also find me on Skype, fan.yang.cmt. Alright, so thanks again to FX Street, to Maud, to Vicky for setting this up, And enjoy the rest of the webinars today at FX Street. They always do a great job getting all these experts and traders in here to share our opinions. All right. Thanks again. I hope to see you guys. Holler at me in Skype or on the website, and hope to see you guys next month when I'm here again at FX Street. All right. Trade well, trade safe.